Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for January 20th, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.48 rose from 1.18 last week. The total count of securities in bullish or bearish patterns increased 5% to 3,396. The count of bearish stocks decreased 8%, while the count of stocks in bullish patterns increased 16%. The Pirls P&F market breadth summary chart shows us a market now 2 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 381 points for the 8th advance in 19 weeks. At a negative 270.69 points, it continues below all 8 tops above plus 100 in the last 30 months, and it has risen above the August 2017 low, and continues below 2 of the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 5 accumulation days, 0 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on lower average daily volume. Momentum. At Monday 114 close, the CCI 20 daily had 6 days above zero, forming a Woody's uptrend. Now at a positive 118.80, up from a positive 93.79 last week. The CCI 20 daily is outside the plus or minus 50 range and will need to fall back into that range in order to form a zero line reject long entry point. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 9 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. The CCI 20 weekly, in a Woody's downtrend, rose to a negative 38.21 from a negative 71.10 last week. It is now within the plus or minus 50 range required for a valid zero line reject short entry signal if it declines next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 are negative. Summary: oil services, brokers, and banking on the top. Gold and silver and S&P retail on the bottom. Bullish, brokers and KBW Bank have entered the top 5. Gold and silver continues in the bottom 5. Comp Tech has left the bottom 5. Oil has left the top 5. Bearish, oil services continues in the top 5. S&P retail has entered the bottom 5. Focus this week from American Enterprise Institute, essential for understanding economics today. The following tweet with a chart that puts inflation from 1998 in context by category. To quote the tweet, take a look at what at MarketWatch called the chart of the century. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl. www.s2pmarketsignal.com. For Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.